My part in this presentation is about the outlook for the investment banking and the capital market financials. This industry is facing the most severe investment crisis in the last 30 years. It is estimated that already nearly 6 quarters of the industry earnings will have been wiped out largely by MTM losses. And the first 3 quarters of the 2008, this crisis already started and reassembled the 1989-1990 downturn, which was the most severe of the 5 crises in the last 20 years, wiping out 6.5 quarters of the industry earnings. It also looks more severe than the dot-com crisis and the 1994-1995 Mexican crisis. A myriad of experts and leaders share the same or agree that there are some parallels to the 1989 crisis, especially the liquidity crisis that put several firms out of business, as well as the broader bank funding and credit issues. I'm going to provide some statistics about the last 5 crises in the last 20 years. And it started with the Black Monday in 1987 with a duration of 1 quarter. The Young Bond crisis with a duration of 6 quarters. The Mexican crisis between 1994 and 1995 with a duration of 4 quarters. The Asian Russia with a duration of 2 quarters between 1997 and 1999. The dot-com and Enron crisis with a duration of 7 quarters, that was between 2000 and 2001. And the actual crisis, named the subprime liquidity crisis, that started in the late 2007 and continues today. Major crises in the last 20 years have lasted for about 4 to 7 quarters, but before industry earnings go back to prior levels of profitability. Only once in 20 years have revenues fallen for 2 years in a row. That was between 2001 and 2002. And a more steeper yield curve and low rates have always helped restart revenue momentum. In fact, the strongest correlation of investment banking growth is to these 2 factors in global growth. Also products such as merger and acquisitions, leverage and finance. The time for activity levels to return to previous peaks have typically been of the order to 4 to 6 years and sometimes longer. Recovery should be trading in the short term. Overall, it is natural to be worried about the recent crisis and think that this crisis will run longer than many other previous events. Given global growth and the intense policy response, the industry hopes that the return to prior earnings levels is still possible in the next 6 to 8 quarters from now. What is less clear about this crisis is the regulatory issues that impact on specific products and markets. Although it's expected that this will pay great attention to the underlying levels of true risk transfer and credit risk transfer and funding vehicles. It is possible that the risk weightings will change for mortgages, for instance, or the natural exposure to credit rating agencies of adjudication of risk capital. Given to the recent problems, regulators might wish to review whether it is a good thing or not to hardwire rating agencies' views into the capital ratio requirements for banks or some aspects that are already in this industry. In the medium term, it is believed the return of this income must be driven by return to credit distribution, but it expects some major changes. There are no new geographic asset classes with the depth and breadth to drive significant fee income growth. The benefits to investors as well as to banks remain in a short for exposure to specific asset classes and risk types, such as diversification and avoiding double taxation of investments and credit via bank. Some of the market failings are the sloppy underwriting standards, asset liability mismatch in warehousing, and overcomplicity under the scrutiny of poor resource of structured products remain as the bigger challenges for this industry. That would be my point of view in the challenges for this industry. Thank you very much.
Hello, my name is Damian Rodriguez, and I will be bringing Group 6 presentation to a conclusion. Now, as you may know by now, the Goldman Sachs Group is a bank holding company that engages in investment banking services. Now, my group has already discussed various financial aspects of how the company operates. Also, they have discussed where the company has been, where it is, and where it is potentially growing to. Now, I will elaborate a bit on the career opportunities offered by the Goldman Sachs Group. Now, such positions that the Goldman Sachs Group has to offer are internships, analysis positions, and also new associates. Now, analysis positions, these are the most typically suited for students that are just graduating from university. Of course, graduating with a bachelor's degree. Now, the new analyst position, this entails daily duties such as creating Excel spreadsheets with financial data, generating reports such as weeklies, and also creating prospectuses and answering client calls. Now, analysis positions, generally on a salary point of view, make anywhere from $36,000 to about $45,000 a year. Now, the Goldman Sachs Group also has another position to offer, which is a new associate position. Now, that position requires a master's degree, so it's not as typically suited for a student that has just graduated, since for the most part those that graduate with a bachelor's head straight into their career path, and if they do get a master's, they're already within that career path that they've chosen. So, let's do an overview over Goldman Sachs. They do have these positions that FIU students can go out and in search of hope fulfill. But Goldman Sachs also goes the extra stretch. Goldman Sachs also goes to FIU campus and does recruiting from time to time. Now, the last time that Goldman Sachs was at FIU was in 2008 spring semester, where they recruited one individual for a technical analysis internship summer position. Now, Goldman Sachs was so happy with its position that it filled, the individual did such a good job that they offered the individual a full-time position thereafter his graduation. Now, this is just one example of a good recruitment done by Goldman Sachs at FIU, which shows that FIU students not only have the opportunity to receive recruitment from Goldman Sachs on campus, but also they know what they will get into once they graduate and the opportunities that are out there with the company. Now, my group and myself would like to thank you for your time, and we hope that we have given you a better understanding of investment banking companies and also the Goldman Sachs Group company. Thank you.